I don't think that I can project or tell what a business is going to do in the future. I don't think I have that capability. We don't know where we are going, but we can make an assessment of where we are. You write what you think is making sense to you, irrespective of what the audience wants. And I think that is how we write. We think that this is something which is logical. The idea is that if the reader reads this and takes some action or doesn't take any action, that shouldn't hurt the reader a lot. I don't think that investors do take great decisions by listening to others.
So we have Sahil with us today. Sahil, as you know from Twitter, is a quite popular personality, and he has about what? How many followers do you have on Twitter? You have like 35,000?
40 something.
40,000. Okay, I was lowballing it. So Sahil writes Netra. Netra is one of the most revered kind of intellectual property that we have over here, and there have been times when people have called me on conferences and talked with me. They're like, I read Netra, and I was like, a really good guy writes it, who has this investing mindset rather than, and he's an investor himself, rather than just writing something as an analyst or just putting the content out there. So there is no clickbait happening there. There are actual signals that are in there, and you could actually implement them. So Sahil, you run a lot, and you run with discipline. I would say, like, you run every day. And we were even on one of our ops sites when we were there. You went running in the rain.
Yes.
So how is it going? Did you come running today over here?
No, I ran
Because
in
we
the-
started recording at 7:30. So probably.
I ran in the morning. I don't
Okay.
run every day. I
7
run,
is morning for other people.
my morning is 4.
Yeah,
So I get up at 4 a.m.
Okay.
and 3 days a week I run. I don't run every day. Other 3 days I lift
Okay.
weights. So, but yeah, there is no weather, no location dependence on
How long
running.
do you run?
I run about an hour and a half. Depends on the day. But yeah, that's 60 to 90 minutes.
Okay. And how many kilometers do you cover?
Between 10 to 15.
10 to 15 and
60 to 90 minutes, yeah.
So you're running like 10 kilometers per hour.
Roughly.
Okay. That's good. That's good. All these kind of disciplines also help you in investing.
Yeah.
Well, and like you said, like contrarian streak is not just in investing, it's in...
I think it's mostly natural.
Yeah, it's a natural, it's your habit, it's a trait.
It prepares your mind well.
Yeah.
I think it's the outcomes for the behavioral aspects are more fruitful.
Yeah.
I don't think it's required to do all this to become a great investor. I don't think so. I think there are a lot of people who are very domain independent.
Right.
I mean, they can be great at one thing and then, not be great at everything else.
Right.
And they are great. I mean, you will find great investors who are extremely undisciplined in everything else.
Right.
But they are very disciplined when it comes to investing. So it's not that you need all this. But for some people, for example,
It could help.
It's more helpful.
Yeah. I remember being contrarian from kind of childhood, like, in 11th, 12th grade when I was in school, and other people would start wearing different kind of pants, and there would be low rise fashion that would come out, there would be bell bottom fashion that would come out, and I just refused to do any of that. I was like, I just stuck to my classics. Yeah, no trend following. So as soon as something would get popular, I would just get put off by it. So that really happens. That's kind of a trait, I would say. And some people are like, no, aajkal ye chal raha hai, let's do that. So I'm like, no, this is not happening. So yeah, in terms of Netra as well, I think you have a lot of like contrarian calls, and that's more of a trait. So what can investors learn from it, or is there an actionable way for investors to act on your insights?
So we want to bring a sort of a solution for investors to take the benefit of how we think and how we write Netra and put it up in a product format.
Yeah.
I think that could be very beneficial for people who are aligned with this thought process.
It would be like a fund of fun.
Yes, hopefully. Yes. So that's the endeavor. And as you know from our past product launches, we are very particular about not launching products uh, because they can get AUM or they are easy to sell, etc. We are not doing that. So we want to ensure that it solves for one thing only, which is that if you are an investor, you can stay invested and compound your wealth. I think if a product can solve for that, then there is a reason to launch it. Otherwise, you don't need. There are already so many products.
When I first read Netra, it was in 2022, I think. I think it was the August version. I don't know when you started. When did you start actually?
I started in May 21.
May 21.
I
Okay.
joined DSP in May 21. So that's the same month that we started.
Okay, so that was quick.
Yeah.
So you really came with this thing in mind or what?
No, it was actually not my idea. So the idea came from Aditi.
Okay.
And I wrote something similar for about 10 years in my past organization, but it was not so publicly oriented and it was largely for internal clients, internal sales team. It was very similar in some form or fashion. But the idea came from Aditi. The idea was very simple that can we present truthfully, factfully, what are we seeing in the markets? What are the signals? What are the data points that we are looking at? And then we can communicate it truthfully, factfully with the market. And I think that was the only thing that she told me. And that was it. We started off and then built on it.
What were some of the first insights in the first edition?
Largely, I think they were related to commodity markets because commodities is something which I started my career with and I track them quite a lot. So it had a mix of commodities and equities at the beginning. Largely, it was a lot of insights which publicly were already available. I mean, people already knew them. It's not. I think there are only about 20 data points
that you feel are valuable.
They actually come out. I mean, there are only 20 things that you can talk about eventually.
Yeah.
Although I may track
In one edition, you mean?
No, overall.
Overall.
So
Okay.
if you look at the last
like first principles wise, like the broad structure.
If you look at last 50, 55, all the editions that we put out, you might count 200, 250, whatever number of different data points that we've used, visualizations. But I think at the core, there are just 15, 20 most important things. And then you visualize them differently.
What are some of those top 3, 4 things?
The number one, I think, is always where are we in terms of extremities? Can we pinpoint that is a particular market at an extreme versus what it has been in the past, right? And that I think is very useful. Usually, I think the most powerful one comes from valuations. And are we at an extreme in valuations in certain part of the market? I think that could be the number one.
So you're looking at like cliffs and valleys, basically, like where we are in the top of the cycle in certain sectors or certain industries, certain geographies, or we are at the bottom of the sector, or not like bottom, but we are going through a rough period or something like that.
That's right.
Okay.
Yeah.
So you try to avoid that a lot of times.
I want to look at them more closely. I want to look at them why they are there. Yeah. Is there a plausible reason that we can ascribe to, which is logical? Yeah. Of course, most of these reasons are justifications. Even our own minds will play tricks and give you justifications, and most of them are wrong. Yeah. But we can at least look at history and say, yeah, this is something that we haven't seen earlier, or we have seen earlier, and then probably take a more informed decision.
Here we always talk about like solving certain value for like our end, investor. So what problem were you solving when you first, started thinking of writing this publication? Because that was fairly quick turnaround of thoughts that you joined in May 21 and you start writing Netra. That was the first thing.
I don't think there are any lofty goals that I started with. And I don't think we still have any lofty goals that we are going to solve some big problem in the world. I don't think so. I think
you're very stoic in your thinking. I've told you that, like as per my conversations with you, like you always say, like probably this becomes something 10 years, 15 years down the line, or it just stays like it is, or it just dies out. And you are very detached with it. I love that.
Yeah. So my idea is that, as I said, no lofty goals. The idea was very simple: to be data driven, factful, and I guess there are two types of content or research or outputs that an analyst can produce. One is that they want to write what people want to read. So, for example, today people want to read about stocks and new companies and new technologies, etc. So, you could be a great analyst, you can write about them and make a good value addition to the whole ecosystem. The other is that you write what you think is making sense to you, irrespective of what the audience wants. And I think that is how we write it. We think that this is something which is logical, makes sense to us. If I was sitting here, doing something with this data point, this is how I will look at it. And I think that is the starting point, and that is the end. Uh, Probably on the way, maybe one or two mini goals may have gotten added, which is keep it simple so that it doesn't become too complicated, because over time things do get complicated. And second goal is, of course, always to uh, be reflective of the first principles.
Yeah. What are those first principles with which you write, Netra?
There are not many, but I think the first and most important one is the margin of safety. I want to make sure that whatever we are writing, at least the intent should be that you shouldn't get harmed with it. So, for example, if you're writing a data point, then probably it should curtail the downside. Um, the idea is not to look for some fancy, big winners or big hits. That's not the idea. The idea is that if the reader reads this and takes some action, or doesn't take any action, that shouldn't hurt the reader a lot.
So what is the way in which you personally, when you're writing this, or in general, view the world? Like like I have some sense of how you look at the world. You are a valuations guy, according to me. You're looking at extremes on both the ends. A lot of time when we have had discussions, it's rarely about the business itself, but more about, like, where we are in the cycle. So, and that's kind of interesting to me, because sometimes we as investors, we get really swayed by the business on one side or the other, and a lot of times the narrative is talking. There are some 2% ROE companies in the past 5 years which have gone 10x, 11x, and it's not. It just tells you that the starting valuations were silly as their ROEs. How do you see the world first, and how do you see the world from the lens of Netra?
Sure. So I think first I start from, let's say, an inward journey. I look inside, and
What does that mean?
I mean, I know my capability. I, I'm not overestimating my capability. I don't think that I can project or tell what a business is going to do in the future. I don't think I have that capability. So I start with that lens, and my focus entirely is on. Let me put it that way. I've used this line earlier, wrote it in Netra also, that we don't know where we are going, but we can make an assessment of where we are. Right. So that is the most important point for me. I have no clue what's going to unfold in the future, but at least I have history, and I want to stick with that history and then make an assessment. And as you said, there will be things which will unfold for the first time, right? Which may have not happened earlier in that form of fashion. For example, a high multiple company continuing to deliver and becoming even more expensive. It has happened many times, right?
Yeah.
My guess is that I'll miss most of them. And I may get lucky and get one or two of them, maybe by luck. But I think I'll miss most of them by design, because I know my capability. So the starting point is always from the inside. And second is that I look at myself more like a defensive investor, so to speak, in Ben Graham's language. Um, and I stick with it. So my idea is that if I'm cautious enough and logical enough, then I'll maybe get something extra from the market on its own. That's it.
So some of the calls that I really was intrigued by was healthcare, right? And I think it did more than a 56% kind of a CAGR since you uh, had that pointed out in Netra, and that was in 2021.
22 September,
22.
yeah.
Okay, September 2022. Yeah. So how did you come about that call? Because that's a broad call. That's a thematic sort of a call rather than anything else. Most people don't have the wherewithal or stick their neck out and say like this is the time to buy. Like if you are not buying over here, I don't know when will you buy. So how did that come about? And you kept highlighting in like multiple netras going forward, and that's like the pattern that I have seen. Once you get on something, that you keep highlighting until it actually works out.
So for healthcare, I think the idea is very simple. As you said, market cap of the overall, let's say 96 companies put together was slightly more than one or two IT companies. I mean, they were really cheap in the overall. And
That's insane to think about today.
yes, and the clincher was that 2/3 of the universe. So that BSC healthcare index had about 96 companies on that day when I was looking at it, and 2/3 of the universe, maybe like 60 companies or more, were trading in the bottom 30 percentile of their valuations.
You mean
Their own history? Yes,
the median and
the
the
P
means.
multiples, EV to EBITDA.
The mean and medians.
Absolutely.
Okay.
So that was one starting point that, yeah, there is no froth in valuations at least. Price froth was already absent. All of us knew that from 2015 onwards, nothing had happened. And then we had an upswing post-COVID, which died down very quickly. And then two things adjacently were happening, that price erosion in US was sort of running out. It hadn't run out completely, but it was also reaching an extreme for a lot of pharmaceutical
and FDA
companies.
inquiries had peaked.
Yes. Yes. So my guess was that most of the things which could go wrong for the sector had gone wrong, and then it was again that valuation call. Second is that it was not a timing call. It is never a timing call. I mean, you can't time it. The reason is that you don't know when this stuff will work. You have no clue whether it will start going up in 6 months or 1 year or 2 years. So as you said, that until it remains cheap, or
you'll keep highlighting.
You keep on highlighting it, and that is what we do. And the difficulty arises when people want to also time it. They want that momentum aspect also, which I think in most cases, if the quality of the business or the sector is okay, it's not a bad quality sector or business, then I don't think you need to spend too much time in thinking about timing.
Yeah, because the value becomes its own catalyst of sorts at that time. Yeah. And what about you also wrote about auto. That was also in 2021. And auto had already gone, like 2018, I remember the numbers had peaked, right? And the cycle had kind of run out of gas at that time. And, and all the big failures in the NBFC space had taken place. Like, it was Ireland FS, it was DHFL, and you had, NBFCs failing left, right, and center. And there was like a lot of panic in the market. And since then, auto had actually peaked, and then 2020 strikes, and then the demand just drops off the cliff completely. So when you come out in 2021, earlier auto cycles have actually lasted more than 5 years. Why did you think this one is much faster than like 2.5 years or so?
So I can now look back in hindsight and see the justifications. At that time, I think the logic was that a lot of government spending was coming online without any doubt. And it was very clear that there is going to be a comeback of demand, sort of, after the reopen happens, etc., post-COVID. And I remember the word sticking out in my mind at that time was, which I told myself, was hedonistic demand. That people are going to say, I have, sat at home for a while. Now let me go out and, do something about it. And plus, you also know that from 2013-14 onwards, autos had a very bad time.
That revenge buying.
I mean, there was nothing happening in auto. No volume growth was happening for a very long time.
Yeah.
And one interesting fact was even the MNHCV cycle was getting a revival at that time in 21.
Yeah.
So it was sort of all the 3-4 segments within the auto, MNHCV, CVs, LCVs, two-wheelers, everything was seeing something coming up, although two-wheelers I think was sort of very slow to
Yeah.
ramp up, which was very unexpected. Second thing was also sort of that many stocks started to make lifetime highs.
Yeah.
Which was a very interesting fact. Sort of an antithesis when you think about valuation.
The market is giving you confirmation of you are on to probably something.
Yeah. So I think these two things put together was a very interesting starting point at that time. And plus, I don't think we had to worry too much about valuations during the COVID era, which was a very rare.
No, but at this point, it was already 2021.
Yeah.
It was so market had already started shooting back up, right? So you were already trading above 13,000 on the Nifty when it had touched 7,800 on 23rd March. So how did you look at that part?
So my sense was that at that point it was very difficult to understand, where the valuation cycle is going to go. And I remember these conflicting thoughts in my mind कि historical valuation पे तो हम already आ गए हैं. How much more can you rally from here? But I remember clearly that during that March 2020 point, the amount of money that central banks threw, I knew that it is too much. I mean, it's not needed, at that point. And interestingly, I had published a report in my previous organization, which is still on the web, I think.
Okay.
The title was only buy, nothing else, because the valuations had become so.
One more interesting thing about Netra is you, like a lot of us who just invest, right? We are not looking at a lot of macro indicators. You also track like yields and bond yields, and when they are peaking and they are going down. That's very interesting to me because that makes you a little multi-directional in your thinking, because you're getting like signals from multidisciplinary or sorts, and like you're getting signals from like various assets and then trying to combine them and make sense of that. And coming to the asset part of it, one of the calls which have been a home run, where you have been just where you just crushed it, was gold for me last year. And I remember coming to you last year and just talking with you, and you were like, I was like, Sahil, my dad was asking about silver, and he thinks it could be interesting over here because he has talked with some of his jeweler friends and everyone. And you said he's a smart man. He's a smart man. He should definitely buy some because I think it's really bottomed out and the trajectory is upward from here. That was an interesting comment. I don't know whether my dad bought or not, but like, but this is kind of interesting that you highlighted the same in Netra going forward, and it was silver and it was gold and those two precious, the miners, gold miners, like the gold mining fund and all of that. So you basically had that kind of sense that this is the time to get in gold, and the call just went absolutely right. You told it at the bottom and it just went up from there. And what we are up like 90% from there, or like more than 100%?
Gold, silver is up, I think, more about 100%.
Yeah, and it went up something like 160-70%.
Yes,
right. And
miners, I think, became 3x.
Mine, yes, always the stocks. Stocks always go 2x, 3x. It's like Tanishq versus the gold jewelry market. Like, so what was it in gold that you saw? And I keep seeing your tweets and posts on LinkedIn where you just give your framework of like, looking at gold and precious metals and commodities. But just elaborate it for me, like very simply, because I don't understand anything that doesn't have cash flow.
Sure. I'll tell you, for gold, I think it was very clear. So initially I said that, let's say gold market is about 4,500 tons a year. Yeah. Demand and supply is neck and neck always.
4,500?
That's right. Annually.
Okay. Across the globe.
It's a small market. Okay. Yeah. I
would have assumed much larger, actually.
It's the size. And the point was it's a neck and neck market. Demand and supply is neck and neck. For last 5-6 years, at that point in 21-22, supply was slightly lower. Demand was slightly outstripping supply. So there was a very slight deficit. And I said that if a new buyer comes in, it will take the prices higher. It was a very simple hypothesis. I did not know who the new buyer is going to be. I thought that it will be institutions. It will be pension funds and other guys who will come and step in and take the market higher. But in 2022, for the first time, central banks bought 1,000 tons of gold. So if you go back to a 22 uh, product literature that I wrote, we launched a gold ETF, something like that at that point, and I said that this is the first year that I'm seeing 1,000 tons demand from central banks ever. It's never happened, right? And if they are going to do this again, then prices are going to jump quite a lot.
Yeah.
And it took a while, but I think that hypothesis played out, not because I wrote it, because it just happened that central banks started loving gold a lot more.
Right.
And that, broke that demand supply barrier, so to speak. And then I think things panned out that way. And also, there were a lot of conversations with a lot of people, but I never came across anybody who told me what should be the price of gold. Right? People talk about gold should be 10,000 or 5,000, but nobody said why. So I said that let me put it down in a theoretical framework. Of course, it's my framework and it's not right or wrong. I don't know whether it is right or wrong, but it's one way to think about it. And then we published that literature saying that this is the theoretical price of gold. And when we did it for the first time, the price came to about $3,300 or $3,400, the theoretical price. And price at that time was about $1,800. It looked stupid. It looked stupid. And
this was the first time my mom was sarcastic with me.
Yeah.
Like she basically said, you were telling me to put money in mutual funds, and look what gold has done.
Yes. And I think I told one of my fund managers that your competition is my wife.
Yeah.
That her portfolio is doing much better. So I think that was it. That then it came out well. I think it worked fine. So
How do you balance all of this? Like now, when gold has already run up so much, right? And do you give like a signal that it's kind of topping out? When do you do that? What is the framework behind it?
sure. So I wrote about it in October, Netra, that
October 25?
yes,
Okay.
saying that this is a time that you take maybe 5% off weekly and pare down your positions. You don't need to be overweight anymore. You've got like a 2-bagger or 2.5-bagger in gold.
1 year. Yeah.
In one, and the reason was that it was very close to the theoretical price. And when you looked at the price dynamics, what do you want when gold has to do well? Let's say you want a weaker dollar, you want real rates which are lower, right? You want inflation to be higher. All these were working against gold. They were not favoring gold for the whole cycle. So the biggest gorilla in the room was the central bank. They were buying, and the prices were rising.
They were buying what, 1/3 of the whole supply.
So 1,000 out of 4,500 tons or 4,000 tons roughly.
Yeah.
So they're buying a
25%.
fourth of everything, which is a very large number. But in the first 9 months of 25, they bought lesser than last year.
Okay.
And the prices are reflexive. You can't have 1,000-ton demand at $2,000 having the same impact as 1,000-ton demand at $4,000. It's not going to happen, right? So the biggest reason started to unruffle. You are already at a theoretical price point. So you say that I don't know whether prices are going to go up or not. I have no clue, but I lack my sense of margin of safety. You know? And so you take a step back. You go to a more normalized,
So
neutralized.
there is more downside now probably than the upside, or it's kind of capped. Like the risk reward doesn't make much sense to be.
I would say that once I think that there is no margin of safety or poor margin of safety, then I think then my position or my view is then dependent on the folly of the market, on the greater fool theory, which I don't want to play.
Yeah.
So that is how I think about it.
Do you think like this kind of discipline, Netra-like discipline, sort of kind of help our investors in some or the other way?
So I will not kid myself. I will be very truthful. I don't think that investors do uh, take great decisions by listening to others. It's not going to happen, right? We have to be very truthful. It's always, we always act as per our own convictions. At the margin, if we are able to help, let's say, between 5 to 10% of investors, I think our job will be done, which is also a very big number. I think 10 out of 100 people listening to you and acting accordingly or not acting hastily, I think will be a good outcome.
Yeah.
But I think that is how I think about it. I do not think that by writing or even highlighting the facts, things are going to change. The reason is that I love this quote from Taleb. He says that if you are lying, keep lying.
Yeah.
Do not surprise me by suddenly telling the truth.
Truth,
That is
yeah.
how we are.
Yeah.
We love our lies. So even if we are factful in what we write, many people will shun it because it doesn't match their narrative.
Right.
So we are looking only for those 5-10% people who understand and look at it from an unbiased lens,
Yeah.
and I think they can benefit from it.
And is there a world in which actually you know you kind of uh, take some decisions and it will actually benefit the investors? Like, can it happen? Because the thing is, like, I would love to have someone take care of the gold allocation
Yeah,
and silver allocation when I have no clue where they are in the
absolutely.
cycle.
Sure.
So how does that
So my
happen?
sense is, Ramneek, ki, if I buy gold today and I sell it, I pay marginal rate of tax. It's very high. If let's say, today I like buying government bonds, the duration appeals to me today.
Yeah, the long duration.
That's right.
Okay.
If I take that decision, and even if the decision is right, and if I make money, I end up paying a lot of tax, which will reduce my post-tax returns.
Yeah.
So I think a multi-asset framework where I can take these decisions, right, is the best framework to have a multidisciplinary, multi-asset approach. So maybe sort of a fund of fund which can, navigate these areas together, uh, incorporating the principles of how we write Netra.
Okay.
I think that could be a good combination.
So like Netra fund of sorts. So it's like basically where you would just asset allocate everything, right?
Absolutely. So you act like an asset allocator.
Yeah.
Maybe you also act like a multi-manager. I mean, you can, I know and I can see that there are certain skillful equity managers. They can generate an alpha with their skill. I can give my money to them. Why? I don't need to reinvent the wheel. I can act as a asset allocator at the top, and then maybe I want a little bit of gold or a little bit of a duration in
Can
my.
you invest in NPS? I'm just kidding. Essentially, it's like a fund of fund, but you are also giving money to the active managers and the passive manager, whatever you feel is at the right cycle for you to
Absolutely.
go up from there.
Absolutely.
Okay.
Yes.
Okay. So in terms of taking more actionable ideas from your own insights through Netra, what would the triggers be, right? Let's say you just gave a call regarding gold.
Yeah.
How much would allocation would you have in your personal portfolio? You may be 60% gold, and I know you do that a lot, like you would just go to treasuries and you would go 60% to gold because we have talked and I know how you kind of think, but how would you make it actionable for the end investor if you were to do this?
So I think we need to take a leaf from Ben Graham. I think it's keep it very simple. Don't go below 25% equity ever. Don't go beyond 75% equity ever.
Yeah.
Be in that bucket. So how I think about it, have a core allocation. Let's say 25% equity, 10% to gold, 10% to short-term debt. So you've got about 45%, which is never going to move. It's going to stay there forever.
Yeah.
In the rest, 55% is where you play around through the cycles. And by cycle, I means multi-year cycles. You're not talking about a month or a 2 or a 6 month period. So you allocate accordingly. For example, had we used, let's say, gold, silver, etc., it would have taken about 3.5 years to that for cycle
out.
to play out to mature. So in that cycle, if I seen the hindsight, I would have allocated between, let's say, 20 to 35%, good or bad times,
Okay.
to this theme, gold,
Okay.
silver.
So you would have started much earlier, probably a year earlier, but you would have scaled up the position to 35% because as the prices were not going anywhere or they were coming down at some point.
So that is how I think about it. So if I that 55%, as I said, is going to be the clincher. And then if you get, let's say, if you throw in an IT in between, you can't go to 35% in a specific sector, right? You can't be that way. So you have to be a little more middle path in
Right.
terms of how do you play around with sectors and themes, because they are
But
dangerous.
sometimes the valuations go so extreme, right? Like I wrote in one of our letters, it was, price versus value is sometimes the only due diligence that you need.
Absolutely.
Obviously, there are other factors. You have like management should be good, and it shouldn't have like sketchy
Those are the
past
bare
and
minimums.
those are
You
like
have to,
hygiene checks.
yes.
So those are bare minimums, like as you said, those are the floor, and you have to just play above that floor. But the thing is, it becomes very difficult when the price and spread of the value just keeps increasing to not increase your position. So
It's a tough ask.
yeah, it's
It's a
it's very tough because markets rarely give you such opportunities, and if you're not capitalizing, kind of George Soros kind of a mindset over here, you're like, how much do you make when you're right, and how much do you lose when you're wrong? That's the only thing that matters, right? And position sizing is all that matters. You could have all the 10x's in your portfolio, but if you had like 0.5% position, like no one cares, and even you don't care. So how do you think of sticking to this middle path?
I'm sure it's very difficult in real time, but usually, I've learned my lessons from 2005, 6, 7, 8, 13, 18, 2020, etc. And by the time
Example share karo.
I was sitting in 2008 cycle, I was lucky that my boss was very factful and bearish at that time, so we got saved. I was a rookie, and so I didn't get burnt. But in 13, I got burnt.
Where what happened? Give me an example. Yeah.
Largely because I think I was a little levered in terms of my positions, and so that took away at least, I think, 7, 8 years of compounding for me. No doubt about it. And by the time I think
And that
COVID
was
came
professionally or like in your personal?
in the personal portfolio.
Okay.
In 2008,
You're wild in your personal portfolio. You are, right? Like a little bit at least.
I won't say I'm wild,
Yeah.
but I'll tell you what I am.
Like Buffett was.
I'll tell you what I
He
am.
was shorting copper market, like, and all of that. He was doing all
So
of
I'll
that.
tell you that almost all the times I am probably the sanest guy in the room.
Yeah.
But if the market goes insane, so for example, if market presents to you COVID on a plate, I would put everything there. I will go, I'll bring whatever, buffet calls, you bring the bucket out.
Yeah.
The problem is that those opportunities don't come often.
Yeah, very rare.
When they come, whenever they come, you do not have the courage to
Execute.
execute or get that bucket out. By the time you spend about 20-25 years in the market, I guess if you have the right mindset, you may have that courage.
Yeah.
So my sense is that I would probably say that I want to show that courage when that opportunity comes. In my mind, I think I would be able to, but I think it's going to be very hard, because when these things come, for example, yesterday I was talking to my team and I said, think about a scenario where tomorrow morning you have a nuclear alarm going off.
Yeah.
And stocks fall 20-30%. Will your valuation framework that you are going to that you are showing me on Excel sheet today hold? Will you think about selling your own portfolio or buying?
Yeah.
What will be your decision? So I think if that alarm goes off, nobody's going to buy. Those things are, I've seen that happening.
Yeah.
But so my guess is that when extremities come, I need two things. One, I need capital. Therefore, most of the times I am cautious, and
You are in treasuries.
and second is courage. And courage will come from capital.
Yeah, and experience.
And experience, of course.
So did you behave better during the COVID drawdown?
I guess so. I think I did not had a lot of drawdown during COVID because I was sitting on some amount of cash prior to COVID, and which was maybe a lucky coincidence or whatever framework.
Yeah.
And when the COVID crash occurred, I was lucky to. I started allocating on the first lower circuit, which was like 8,400 or so on the Nifty. I remember very clearly. On that very day, I said that this is it. Then the market went down to 7,500 and
no, it was it was, I think, 7,801 was 7,801 was
so there was
low.
no, the market low is I think about 7,600 or
Okay. Or
7511
maybe
or
7,601 maybe.
yeah, something.
Okay.
There is some 11
Yeah.
I think at the end.
Okay.
7,600 is the number, but I think first it hit a lower circuit about 84 and then it fell again and but I think in the first lower circuit, so my sense is कि जब market में पहला decline आता है, it takes away most of the bad things out.
Yeah.
In the second decline, the stocks that you want to buy, which are of good quality, great businesses, they don't decline.
Yeah.
The other kachra declines rapidly, right? So if you are very valuation conscious, you need to make that move when you see value.
Yeah.
And then you can't really say कि और मिलेगी value या नहीं
you have
मिलेगी,
to
as you
pounce
said.
at that time.
मिल गई तो फिर if you are lucky and not allocated enough, then you allocate more. If you are unlucky, then you just have to sit.
What are the mistakes that Netra has had? Like, what are the calls that you have had wrong? What is the call that was horribly wrong, that you were like, this really did not go the way that we wanted, even in the long run, and you just completely gave up on it because you had something wrong?
So one call which I don't think has panned out, at least till now, is that I thought quality will come back and do well.
What do you mean by quality?
Quality, let's say, as a factor where businesses which have
No debt.
EPS volatility, low debt, usually they their
High
balance sheets
ROIC.
are much cleaner, high ROICs. I thought they will make a comeback much faster, but I think the market dynamics were much more different than I would have anticipated, and I don't.
But
think
you're
it
a
panned out.
valuation guy. Why did you think in terms of quality at that point? Because valuation relatively may be lower, but in absolute terms, those companies are still very expensive.
Absolutely. So maybe that was a mistake.
Okay.
I think that valuation angle did not pan out because it was a broader call on, let's say, quality per se, like a quality factor versus the rest of the market. I think it was a bad call.
Do you think you were also like a little bit early in throwing in the towel on the NASDAQ? Because in 2022, you had given a call to buy global stocks.
Yes.
Right?
So when that 20% decline occurred, we went heavily into technology companies, specifically into semiconductors.
Yeah.
But my guess is that I abandoned semiconductors much earlier than I should have. In the hindsight, it still looks good, but not from the point of view of returns.
Yeah.
Because eventually what happened was that one company outdid everything else by such a big margin that it became irrelevant. And we also took a call we actually took 2-3 calls. One was partly going to China, cutting down on US tech.
Yeah.
I think it played out well.
Yeah. This
More
was
or less
decent. Yeah.
neck and neck or maybe slightly better.
Yeah.
Second was to move away from NASDAQ to NASDAQ equal weight.
Yeah.
Where I said that I want to cut down weights on the top 10 guys and I want to be more diversified. That I think did a poor CAGR. I think NASDAQ did about 25% since then and equal weight did about 18. So large difference between these two segments. So that I don't think it played out so well. Maybe it will play out in the future. I don't know.
You don't know.
Yeah. So these are the outcome mistakes that I can see right now. Yeah. But if they reoccur, I mean, if the same scenario plays out again, I don't know how different I'll think.
So maybe you'll do the same thing again?
It's possible. It's possible.
Because
the inputs continue to be the
same.
Yeah. So maybe I have to rethink about...
But I remember talking with you even in 2023.
23.
So even in 2023, I think it was in September. So I just had written, because I was myself investing in the NASDAQ 100 ETF at the time. And I was talking with you and I said, like, you said, सारे के सारे indicators are looking weak. So यहाँ से गिर सकता है. And you always give probability. You never say ki my statement is definitive, and that's how it should be. But at that time, the Nasdaq was somewhere around 12,000-13,000, and
18,000.
Was it 18,000?
Yeah.
I don't know. Maybe I don't know. But my view was कि अभी वो 40% गिर के आया 38%, and we had this discussion when we were at the Nariman Point office, and you said but indicators मुझे कुछ ठीक नहीं लग रहे, बाकी आप देख लो. And do you think that thing could have been highlighted in Netra in a better way at that time?
I think so. I think maybe
because that was in your ballpark.
Yes, very
Right?
close.
Yeah.
But I think some of these calls, which are like a continuation of a rally, which is already very strong, I think I get them wrong.
Right.
More often than not.
Yeah.
And the reason for that happening is that I'm unable to justify the margin of safety I have.
Yeah.
Which I said at the beginning also. Some of these things I get wrong. And my guess is it has become by design over time.
Yeah, if it's a very expensive thing that falls 40%, still stays expensive.
Yeah.
That's the problem.
Yeah.
Yeah.
That's true. That's
So-
true. So I need to get my imagination hat right in terms of, seeing that if let's say a great trend or a great business is continuing to deliver, how do you continue to value it better? I think that is something that I have to learn.
It was really nice talking to you, like always.
Yeah, my pleasure.
And we should do this at least once more.
We do this more often. I think
But
वैसे
in
तो
your
करते ही हैं हम.
office.
नहीं वैसे तो हम बातचीत करते ही हैं, but I think in a more formal setup is for the first time.
Yeah. So it was really lovely talking to you, and I enjoyed it like always. So thank you. Thanks for being here.
Thank you very much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.